Another day, another story. Warren Buffett, who is a very successful investor, read a book called The Intelligent Investor when he was 19 years old. He thinks it is the best book about investing ever written. The book talks about how the stock market works, how investing is different from gambling, and how to find good investments. The ideas in the book are still important today, even though it was written a long time ago. Are you tired of hearing conflicting advice on how to invest your money? Look no further than The Intelligent Investor by Benjamin Graham, a timeless classic that has guided investors for over 70 years. In this book, Graham lays out a disciplined approach to investing that emphasizes the importance of rational analysis, diversification, and long-term thinking. He provides practical advice on how to identify undervalued stocks, create a portfolio strategy, and avoid common pitfalls that can derail your investment success. Whether you're a beginner or an experienced investor, The Intelligent Investor has something to offer. Join me as we explore the key insights and lessons from this timeless classic. So, I can give you a brief summary of each chapter of The Intelligent Investor by Benjamin Graham, along with examples and life lessons. Chapter 1: Investment versus Speculation. This chapter emphasizes the importance of understanding the difference between investment and speculation. Investing is about analyzing the fundamentals of a company and investing in it for the long term. Speculating, on the other hand, is more akin to gambling and involves making short-term bets on stocks or other assets based on market trends. Example: investing in a company with a strong balance sheet and a history of steady growth over time is an example of investment. Buying a stock based on rumors or trends without considering the company's fundamentals is an example of speculation. Life lesson: don't gamble with your money. Invest it wisely by understanding the fundamentals of the companies you're investing in. Chapter 2: The Investor and Inflation. This chapter focuses on the impact of inflation on investments. It explains how inflation can erode the purchasing power of your investments over time and offers strategies for protecting your investments from inflation. Example: investing in assets like real estate or gold can offer protection against inflation because their value tends to rise along with inflation. Life lesson: keep inflation in mind when making investment decisions, and choose investments that will hold their value over time. Chapter 3: A Century of Stock Market History, the Level of Stock Prices in Early 1972. This chapter offers a historical perspective on the stock market and analyzes stock prices as of 1972. It explores the concept of market cycles and explains how they can affect the value of investments. Example: the dot-com bubble of the late 1990s is an example of a market cycle that led to overinflated stock prices, followed by a significant market correction. Life lesson: understand market cycles and be prepared to adjust your investment strategy accordingly. Chapter 4: General Portfolio Policy, the Defensive Investor. This chapter provides advice for investors who are looking to minimize risk and build a conservative portfolio. It offers strategies for diversification and explains the importance of a long-term investment approach. Example: a defensive portfolio might include a mix of stocks, bonds, and cash, with a focus on stable, low-risk investments. Life lesson: diversify your portfolio to reduce risk and take a long-term approach to investing. Chapter 5: The Defensive Investor and Common Stocks. This chapter discusses the role of common stocks in a defensive portfolio. It explores the different types of stocks and offers guidance on how to select stocks for a conservative portfolio. Example: defensive investors might look for stocks with a history of steady dividend payouts and stable earnings growth. Life lesson: understand the different types of stocks and choose stocks that align with your investment goals and risk tolerance. Chapter 6: Portfolio Policy for the Enterprising Investor, Negative Approach. This chapter offers advice for enterprising investors who are looking to build a more aggressive portfolio. It discusses the importance of analyzing market trends and identifying undervalued stocks. Example: an enterprising investor might look for companies with strong fundamentals that are currently undervalued by the market. Life lesson: analyze market trends and take an active approach to investing if you're comfortable with higher levels of risk. Chapter 7: Portfolio Policy for the Enterprising Investor, the Positive Side. This chapter offers strategies for enterprising investors who are looking to build a more aggressive portfolio. It explores the concept of value investing and offers guidance on how to identify undervalued stocks. Example: value investors might look for companies with strong balance sheets, low P/E ratios, and a history of consistent earnings growth. Life lesson: Focus on the fundamentals of companies and look for undervalued stocks that have the potential for long-term growth.
Chapter 8: The Investor and Market Fluctuations. This chapter explains how investors should view market fluctuations and offers advice for how to react to them. It emphasizes the importance of taking a long-term approach to investing and avoiding emotional decisions based on short-term market movements. Example: selling stocks during a market downturn based on fear or panic is an emotional decision that can lead to significant losses. Life lesson: avoid emotional decisions and focus on the long-term potential of your investments. Chapter 9: Investing in Investment Funds. This chapter offers advice for investing in mutual funds and other investment vehicles. It discusses the pros and cons of different types of funds and offers guidance on how to select the best funds for your investment goals. Example: index funds are a popular type of mutual fund that offer broad exposure to the stock market and low fees. Life lesson: understand the pros and cons of different investment vehicles and choose the ones that align with your investment goals. Chapter 10: The Investor and His Advisors. This chapter offers advice for working with investment advisors and brokers. It emphasizes the importance of understanding their fees and incentives and offers guidance on how to select the best advisors for your needs. Example: some investment advisors charge a percentage of your assets under management, while others charge a flat fee or hourly rate. Life lesson: understand the fees and incentives of your advisors and choose ones that are aligned with your investment goals. Chapter 11: Security Analysis, 6th edition, Foreword by Warren Buffett. This chapter includes a foreword by Warren Buffett, in which he shares his thoughts on the importance of Benjamin Graham's teachings and the concept of value investing. Example: Warren Buffett is a famous value investor who has built his fortune by investing in undervalued companies with strong fundamentals. Life lesson: study the teachings of successful investors like Benjamin Graham and Warren Buffett to learn their investment strategies. Chapter 12: The Dividend Factor in Common Stock Investing. This chapter explores the importance of dividends in common stock investing. It explains how dividends can provide a steady stream of income and offers guidance on how to select stocks with strong dividend histories. Example: blue-chip stocks like Johnson & Johnson and Procter & Gamble are known for their steady dividend payouts. Life lesson: consider the dividend history of stocks when making investment decisions. Chapter 13: The Defensive Investor and Common Stocks. This chapter revisits the topic of common stocks and offers further guidance on how to select them for a defensive portfolio. It emphasizes the importance of a long-term investment approach and diversification. Example: defensive investors might choose a mix of large-cap and small-cap stocks in their portfolio. Life lesson: diversify your portfolio and take a long-term approach to investing in common stocks. Chapter 14: Stock Selection for the Enterprising Investor. This chapter offers guidance on how to select individual stocks for an enterprising portfolio. It explains how to analyze a company's financial statements and offers advice on how to identify undervalued stocks. Example: enterprising investors might look for stocks with a low P/E ratio, a high dividend yield, and a strong balance sheet. Life lesson: analyze a company's financial statements and look for undervalued stocks with strong fundamentals. Chapter 15: Convertible issues and warrants. This chapter explores the concept of convertible securities and warrants. It explains how they work and offers guidance on how to analyze them as potential investments. Example: convertible bonds are a type of debt security that can be converted into common stock at a later date. Life lesson: understand the unique characteristics of convertible securities and warrants before investing in them. Chapter 16. 4 extremely instructive case histories. This chapter includes 4 case studies that illustrate the principles of value investing in action. Each case study examines a different company and offers insights into the importance of financial analysis and the potential pitfalls of emotional decision-making. Example: the case study of Northern Pipeline Company highlights the importance of understanding a company's financial statements and the potential risks of investing in companies with high debt levels. Life lesson: analyze a company's financial statements and understand the potential risks before making investment decisions. Chapter 17. A century of stock market history. The level of stock prices in early 1972. This chapter examines the historical trends of the stock market and offers insights into the level of stock prices in 1972. It emphasizes the importance of understanding market cycles and avoiding emotional decisions based on short-term market movements. Example: the stock market has experienced significant fluctuations throughout history, including the Great Depression and the dot-com bubble. Life lesson: understand the historical trends of the stock market and avoid emotional decisions based on short-term market movements. Chapter 18. The Bond Buyer's Dilemma. This chapter explores the risks and rewards of investing in bonds. It explains how to analyze bond prices and yields and offers guidance on how to select the best bonds for your investment goals. Example: treasury bonds are considered to be one of the safest types of bonds, but they also offer relatively low yields. Life lesson: understand the risks and rewards of investing in bonds and choose the ones that align with your investment goals. Chapter 19. Ben Graham's Challenge. This chapter includes a challenge from Benjamin Graham to the reader to analyze a company's financial statements and select stocks based on their value. It offers guidance on how to analyze a company's financial statements and offers insights into the potential rewards of value investing. Example: the challenge encourages readers to apply the principles of value investing to real-world investment decisions. Life lesson: practice analyzing a company's financial statements and applying the principles of value investing to your investment decisions. Chapter 20. Margin of safety is the central concept of investment. This chapter emphasizes the importance of the margin of safety as the central concept of investment. It explains how to calculate the margin of safety and offers guidance on how to apply it to investment decisions. Example: the margin of safety can be used to determine the minimum price at which an investor should purchase a stock to ensure a safe investment. Life lesson: understand the concept of margin of safety and apply it to your investment decisions to reduce risk and increase potential rewards. Overall life lesson: the intelligent investor emphasizes the importance of a disciplined, rational, and patient approach to investing. By focusing on the fundamentals of investing and avoiding short-term speculation, investors can build a portfolio that will deliver satisfactory returns over the long term. The final and most important lesson from The Intelligent Investor is that investing is not just about making money, but also about managing risk and preserving capital. This lesson applies not only to investing, but to many aspects of daily life. By taking a disciplined, rational, and patient approach, we can make better decisions, avoid unnecessary risks, and achieve our long-term goals. Remember, the key to success is not just making the right choices, but also staying the course and maintaining a steady course towards our objectives. Thanks for watching.